Hello guys, welcome to Saturday webinar. This session will be a short one, okay? Because our portfolio is pretty much is full ready, so there isn't really a need to add more position to our portfolio. But what we want to do is we want to wait and see what the market response will be due to the what do you call that? Due to the tariff, the proposal tariff that came out last Friday lah, okay? Or I mean sorry, not last Friday, yesterday. So for those who are not yet aware, Trump actually called for 50% tariff on the European nation. And he says that he's not looking for a deal. So initially, yesterday, the market was quite in the red. But eventually, it turns out to be not so bad. In fact, I would say the market kind of under respond to this news. So I'm not really sure if market is kind of like hoping that Trump is just faking this tariff. Eventually, it will be removed or it will be paused or whatever, lah, okay? But whatever it is, the market did not respond as bad as it should, lah, because this is, after all, a 50% tariff on top of the base tariff that is being appointed, lah, okay? So let's take a look at the market itself. You can see that yesterday the market kind of came down, but after that it sort of recover. So it is holding this level. Okay, if you look at the S&P 500, right, it is somewhat holding this level here, where previously it was a resistant level. Now it went back down, retest that level, come back up. So I'm just gonna treat this as a very simple support coming in lah. Okay, you don't need to go very far-fetched like what the market maker is stop hunting lah, the big boys are manipulating all those nonsensical stuff. You don't need to go until that level lah. It's simply that there are some buyers coming back in, and the negative response to the tariff news isn't as bad as it should be. And overall, the 10-year yield kind of like initially it went down, but kind of recover back up a bit also. But the 10-year yield is still on the high side. So it's still on the uptrend, it's still on the high side. So this is something that we want to be a little bit careful lah. Okay, high yield is not a good thing for the overall market itself. So now regarding the tariff news. So, European nation, US does a lot of trade with the European nation, so definitely a lot of the stocks will be affected by this proposed tariff, and the main sector will probably be things like the automotive sector, because a lot of raw materials actually come from the European nation also. A lot of auto components lah, okay, they are actually relying on parts from Euro. The next one is apparel. Apparel, I believe, is the one that will be affected the most, especially those that are in the luxury component. For example, the department store like Nordstrom, Macy, Capri Holding, Tapestry, all this, right? They actually carry luxury European brands, which will definitely be affected lah. Okay, I think that's the reason why on Friday a lot of the apparel stocks actually went down also. For example, Raw Store actually went down quite a bit. After that, we also have Dick's Sporting Goods also kind of like went down also. Yeah, Raw Store went down about 9%, and Lululemon down about 3%, Dick's Sporting Goods down about 3%, Nike down about 2%. So a lot of the luxury apparels are coming from the European sector lah, okay? And another sector is actually the wine sector. For example, Constellation brand actually import a lot of wine from the Euro nation also, which can be affected also. So I would think that this is the biggest the largest sector to be affected lah. Okay, and perhaps if we are looking for shorts, maybe these are some of the areas that we can look for. And the next one is the industrial. And in terms of industrial, right, the one that will have a much higher impact, it will be things like aerospace, because a lot of steel, um specialty specialty metal that are designed for aerospace, right? Most of them are coming from European also, and the big one is actually pharmaceutical. Europe, one thing Europe is famous for, is very well known for, is pharmaceutical. Novo Nordisk, Novartis, Roche, and okay, those are the one that I can think of my mind right now lah. But a lot of pharmaceutical drugs are actually made in European lah. Okay, European nations, so definitely will be a factor also. So I'm kind of looking at some bigger pharmaceutical names that maybe we can short. We see what we can find lah. Okay, so these are the stuff that you probably want to focus on a bit if you are looking for a short. But any other stuff, I mean, not really affected lah. Okay, and of course, Tesla was also, sorry, not Tesla. Apple was affected also largely, and that is probably due to Trump specifically calling out Apple. Also, he want Apple to move to move their manufacturing into US, and if not, he's threatening tariff specifically on Apple also. Okay, so Apple definitely hurt the most during yesterday's sell down, and the home builder sectors higher yield tend to be a little bit negative for home builder sector, but Toll Brother kind of like a bit flat. But considering that when earnings came out, Toll Brother was up about 6-7%, but right now it is basically not moving at all. So it is kind of in our direction also. So we will stick to our Toll Brothers. Okay. So aside from that, I don't think there is anything else going on with the European side. Market definitely under response, but it is not how do I call it? It is not a justification to go all in long position. Okay, we still want to maintain a very neutral portfolio right now, especially when things are very uncertain. And having a neutral portfolio allow us to wait and see, allow the market to marinate for a moment, because our portfolio isn't down a lot, so we can afford to wait. Whereas all those people with full long portfolio, right? They may be panicking. They may not sure what's going to happen next week, or what news may come out during the weekend, and they are forced to de-risk. They are forced to deleverage. They are forced to cut loss. But whereas for us, right, we don't really need to do that because our portfolio wouldn't really move so much based on Friday movement. Okay. So now overall, my portfolio, it went slightly back into the negative, but at one point this was like negative 12,000, 13,000 like that, but we are back to very close to break even now, okay, on our open position. So Toll Brother down slightly, but I will continue to hold on to Toll Brother. It is expiring in June, so we see how Toll Brother perform in the coming days lah. Okay, and Kavana is a stock short position, so there isn't so much danger about expiration. Kavana recently kind of like recover a bit. It was quite red, but it recovered a bit. But I think this movement here somewhat flat lah. Okay, for the past 5-6 days, the stock was relatively flat, so I wouldn't really concerned about it so much. Anyway, we are entering a very small position first. Also, I have warned you guys to enter a small position first, and when it finally goes into our direction, we will add more positions lah. Okay, so if you have accidentally entered a very big position, you may want to trim it off first. Maybe you may eat a few $100 loss or $30-$40 loss depending on your how big is your position sizing. It's better to eat the small loss rather than let's say this recover and hit the stop loss, you may end up eating a bigger loss lah. Okay, so this is Kavana. Depending on if you guys manage to enter the 280 short put option. If you manage to enter that, then definitely you are earning a bit of premium from that position also lah. So it's a good thing. I personally have entered it. I put it out on Discord channel, so make sure you are paying attention to the Discord channel also lah. Okay, next, Credo, not much to be said. On Friday, it was green. Initially, it was red, but after that, it went back green again. So, The momentum to the upside is still very strong. There are a couple of times where Credo open up red but eventually recover back to green. So it does seems like there's a lot of buying coming in for Credo lah. Like whenever there's a dip, right? People keep coming back to buy lah. Okay. There is earning coming up on 2nd of June, so this is something that we may want to pay attention to. But we do have a cash secured put position. I personally have two. One is at 50, the other one is at 55. So both of these have different stop loss lah. Okay. For the 50, my stop loss is at 40. For the strike 55, my stop loss is at 50. So it is something that I will personally manage. But if you have similar situation, right, try your best to manage it also lah. Okay. The next one, Dutch Bro. So Dutch Bro went down a bit, but I mean this is within the volatility of Dutch Bro lah. Okay, Dutch Bro by itself is a very volatile counter, and on Thursday it kind of recovered back up quite substantially, about 7% if I'm not wrong. And on Friday, yesterday the performance wasn't so bad. Like it wasn't like very, very red. It's like slightly red also. But anyway, Dutch Bro is a specifically US company lah. Okay, they have not ventured outside of US yet. And I think one of the things that they export is coffee bean, which is one of their cost of goods sold lah. Okay, their major cost of goods sold. And coffee bean, I don't believe they come from European lah. And most coffee beans, I believe, are coming from locally, if not from the South America, the Latin America, like Brazil over there. So I don't think Dutch Bro will be affected a lot also. Next we have Dropbox. So Dropbox, nothing much to be said. We still have the short position, but it is going in our direction now. Okay, it is going in our direction. But last week we have 5 days of basically flat price action lah. Okay, not really moving at all. So that is fine. We will continue to hold on to our position. So VIX currently right now is like not moving at all. But it's good. It's good that VIX is not moving at all because we don't want it to move when the market is in our direction now. Okay, and it's not losing a lot of money. Also, in fact, currently right now it is break even. So imagine you have other kind of shorts instead. For example, you have a S&P 500 shorts or you have a Nasdaq short as a hedging, right? That short is gonna lose a lot of money because from the time that we enter VIX, right, the market actually recovered quite substantially really. And if you have any other kind of hedging, right, those will be losing a lot of money. But what we have here is we have a VIX insurance that isn't really losing a lot of money. What this means is that from the time that we enter VIX until now, our insurance coverage is essentially free lah. Okay, and we want that going forward until VIX expire, which is all the way in December. We will want VIX to sort of not move so much lah. But let's say if market crash, then we will get our insurance payout lah. Okay, so I believe VIX is one of the most efficient, effective, cost effective hedging that we have taken, and it is doing its job very well. Next we have Barry Gold. So unfortunately for Barry Gold, with all this tariff coming in, right, gold is definitely recovering, and if more tariff news appear, then maybe gold might be bullish again. But overall, that is fine because our second short leg on Barry Gold, it reduced our risk to about $900. Personally, for me, $900 lah. But maybe for your case, it may be even smaller. So if I were to be profitable, the profit is about $5,000. But if I'm taking a loss, it will be $900. So regardless, I think we did the best that we could for Barry Gold, and the risk reward ratio is very nice in the sense that even when we are losing, right, we are not going to lose a lot lah. Okay, originally the Barry Gold risk was about a few $1,000, but with the second short leg added, right, we successfully managed to reduce the risk. So I think it is overall the right decision because we definitely have no idea additional threat of tariff are coming in now. Okay. Next, Alcoa. So Alcoa is a little bit I would say we have to be careful, mainly because Alcoa have some foundries in Europe, mainly Spain. So that may affect Alcoa's overall profitability if the tariff were to go through, and a lot of aluminum fabrication are done in European nation also lah. But the price is holding up quite well, and because Alcoa is a ratio calendar with strike 30, right? We don't really want Alcoa to rally beyond 30 before the June expiration also, and it is hanging very close to 30, so that is fine. So it is doing what we want it to do lah. And after the June expire, then it want to choke above 30, then that will be the ideal situation lah. Okay, so I'm not gonna do anything for Alcoa yet. But if let's say things the tariff situation get worse, right? Then we may just exit Alcoa with minimal loss lah, okay? And then we will try to reposition, re-enter again. And finally, my S&P 500 futures, which is what I will call the background beta. It is simply sitting in the background trying to follow the market lah, okay? So I'm not too worried about this. And even like I mean, if I don't have this position, right, and my overall position is actually very, very profitable. In fact, every single position here, aside from Transocean, which is basically a dead trade lah. Okay, every position here is almost green except for Havana and Toll Brother, which are slightly red lah. So I'm not too worried about the futures because I mean in the long run, S&P is going to be green anyway lah. Okay, unless some recession were to happen, and if recession were to happen, market crash, then we have like VIX, we have all our short position that can help us tide through this period. So I don't really have any form of risk holding this lah. Okay, I just want the background beta, the background market exposure lah, which is a lot better. Like a lot of trader thinks they are very smart. They try to buy Microsoft, buy Adobe, buy Amazon, buy this, buy that, and then they claim, oh, fundamental good, fundamental this. But at the end of the day, if you are buying all the big names, right? You are essentially buying S&P 500. Why spend so much time? Just buy the S&P 500 and then you don't need to talk so much really. So that's my reason for having a simple S&P 500 in the background. I am already following the market, but I am also exposed to high alpha, high exposure specific stock that can actually outbeat the market if they goes in our direction. Okay, for example, things like Shake Shack perform very, very well. Credo is performing very well. Dutch Bro recently also performed well. And if market decide to crash, things like Havana and Dropbox are going to perform very well. So these are things that is not that closely correlated with the market. We deliberately choose stocks that are not part of the S&P 500 or doesn't have a heavy weightage in the S&P 500 so that we can get return that are not correlated with the bigger market. If you are buying Tesla, if you are buying Amazon, if you are buying Microsoft, you don't need to talk so much about fundamental already because at the end of the day, it doesn't matter. Just buy S&P 500 because that's basically what you are doing. You are buying all the big component of S&P 500 lah. Okay, so we don't want to waste effort unnecessarily on all this big name stock because you can simply just buy the S&P 500 lah. Okay. So now, going forward, I don't really have a lot of actions to take going forward. We just want, like I said, right, we just want the market to sort of marinate for a while, sit and digest all the information, and then we see what we can do with it lah. Okay. And we also have quite a lot of trades that are going to expire in June. For example, Toll Brother will expire in June. The Barry Gold will expire in June. Then Alcoa, the short leg will expire in June. We have two lah, okay, Credo and Dutch Bro. Cash secured put will expire in June also. So we don't really want to add any more trade for now lah. Okay, we just wait and see what's going on, and then we will try to respond to the market. And in this case, we are responding because we already have a full portfolio. We are not responding to add position. We are responding to see the direction that we can take based on the new information that are coming in. Okay. So now, despite that, I always have backup trades in my backlog to ensure that regardless of what happened, right, we always have something to trade, okay? And in this case, right, I'm looking at Best Buy short position if we need to short some more stuff. And on the other side, you can see Burlington store actually got hit pretty bad lah. So yeah, so I basically at Best Buy that I'm looking to enter. I've talked about microvast already, but microvast I find it extremely hard to enter lah. And I see how I can go about entering this also because it's not a stock that is easy to manage lah. Because it is a very small cap company and it's actually at the brink of running out of cash also. So we see how we can manage this. And I'm also looking at Lululemon short position based on all the tariff that is coming in. So this is one thing that I will be watching closely also. So right now we suddenly have a lot of potential shorts, but not really enough long positions. So I do need to find some more long position now. Okay, especially in the tech sector, but something in the tech sector that is not correlated to all the big names like Microsoft, Amazon, all those lah. Okay, one of the stock that I'm looking at is Alchemy. So Alchemy is a cloud service that deal with banking solution. So it is one area that I would like to look at also. But based on my personal portfolio, right, I'm actually not that afraid of missing out on long simply because I have the background S&P 500 there. So I don't really need to fear I don't have enough long position. And but of course I will always try to have some kind of long position also lah. But if let's say I miss out something, right, I will definitely still gain from my overall S&P 500 recovering. Okay, so I'm also looking for a little bit of defensive long. Maybe I'm looking at Cintas also, but Cintas kind of like hit the target that I wanted to go. So maybe I need to wait for it to retrace or whatever lah. Okay, so if you know how to manage your portfolio, you may want to put in a similar S&P futures also lah. Okay, in this case, I'm using futures. I'm not using CFD. I'm not using options because future doesn't decay. And CFD, right? CFD, you need to pay interest every day based on your position sizing, and that can actually eat into your profit significantly lah. Okay, but in this case future, it doesn't decay. It also doesn't require you to put up a daily margin also. It's simply just sitting there lah. Okay, so it is the best I would say instrument for this kind of purpose where it is simply sitting in the back of your portfolio trying to just follow the market lah. Okay, so in the future ticker is MES. So there are a lot of S&P 500 futures. You may want to be a little bit careful depending on the sizing. They have the micro futures, the mini futures. So depending on which one are you trading, right? You want to be careful with your lot sizing, okay? So that is all I have. So let me just summarize real quick. We have 50% tariff on European nation being threatened by Donald Trump. But the market respond to that tariff initially was very red. The market was very red when it opened, but over the day, right, the market kind of recovered, and I will say that it is under reacting to the tariff lah. Okay, so meaning to say if we move forward and the tariff do really go through, which is in June now. Okay, I think he's saying in June it will go through already. Then we may see the market respond quite bad in June now. So that's something that we want some kind of protections lah. Okay. So that's all I have, and I'll be around. Sorry, next week I will still be around online, but I will be taking a short break because today is the last day of my course. I finished this batch ready. So I'm taking a very short break, about 1 week break lah. Okay, not really that short, but I will still be around online. I'll still be looking at the market, looking at the trade lah. Okay, but maybe next Friday there may not be any Friday webinar. I will definitely do a recording for Saturday webinar, but I see whether if I want to give a live webinar or not, because I will be in Phuket, or I'll be in Thailand, Phuket, and see whether if the connection there is fine or not lah. Okay, guys. Thank you very much, and have a nice weekend. Have a good week ahead. Good night.